My name is Brett Selke, and today I will be pitching Silvergate Capital, ticker SI. Silvergate Capital Corporation is a holding company for the digital bank Silvergate Bank. Its loan portfolio accounts for 12% of its total assets, and the firm's securities portfolio accounts for 50% of its total assets. It's important to note, however, that the future of the company lies not with its traditional banking interest revenue streams, but rather its non-interest income generated from its Silvergate exchange network and the DIEM stablecoin opportunity. It is an industry leader in the fintech and digital currency space, and it provides financial infrastructure solutions and services for the digital asset industry. Silvergate Capital is an FDIC-insured bank founded in 1988 and is headquartered in La Jolla, California. Selke-Silvergate Capital completed its IPO in 2019 and has since grown to be one of the largest players in the digital asset space. While bulge bracket banks such as JP Morgan and Goldman Sachs scoffed at the idea of cryptocurrency in the 2010s, Silvergate embraced the concept as far back as 2013. As a result, it has established a first-mover advantage in the industry and has erected barriers to entry through its Silvergate exchange network and regulatory moat. Silvergate is truly a pickaxe and shovel play for the cryptocurrency industry. Its API is used by the following customers in the space: cryptocurrency exchanges such as Coinbase, Kraken, and Gemini, to institutional investors like Block Tower, SoFi, and Square, to other customers like Kiva and Bitcoin miners, all use the Silvergate exchange network. Despite the exciting growth of crypto, there are not many banking competitors in the emerging subsector that Silvergate operates within. The only arguable competitor in the space would be Signature Bank of New York, but there are several key differences. Signature Bank still identifies its loan portfolio and interest income as its primary business model, and they regard their blockchain platform as more of a complementary service, which is the inverse of Silvergate's approach. Furthermore, whereas Silvergate has been very open to regulators and investors about its Silvergate exchange network and disclosing important financial information, Signature Bank hasn't disclosed any metrics with its Signet platform, such as transactional volume and the revenues that it's gained from it, but had only disclosed the amount of digital deposits, which are misleading. Because of the network effect of the Silvergate exchange network, its entrenched regulatory moat, and DIEM stablecoin mint burn revenue stream opportunity, it is recommended that Silvergate be added to the AIM Domestic Small Cap Fund with a price target of $157.01, representing a potential upside of 32.36%. The Silvergate Exchange Network is a cutting-edge payments platform for its cryptocurrency and institutional investor clients. Its API allows clients to transfer money from their Silvergate account to any other Silvergate client in near real-time 24/7. It has a robust customer base that includes prominent companies such as Circle, Square, Coinbase, Kraken, Gemini, and Fidelity, to name a few. The vast network effect of SEN is creating a moat which acts to deter potential entrants to the industry, as the SEN boasts 1,224 digital currency customers. Last quarter alone, the SEN handled over $239.6 billion in transfers, over 137,947 transactions, an increase year over year of 969% and 242% respectively. The SEN generates revenue by charging transactional fees on transfers with a take rate of approximately 0.0051%. To further expand its capabilities, Silvergate has begun to offer SEN leverage, loans which are USD line of credit loans collateralized by Bitcoin that can be monitored and funded via the SEN API. The SEN loan is an opportunity to increase asset management revenue. And despite Bitcoin losing 40% of its value in Q2 of 2021, Silvergate sustained no cumulative losses. Regulatory moat and know your customer partnership. As an early entrant into the cryptocurrency banking space, Silvergate's head start has helped to distance itself from potential entrants with substantial, continuous investments into regulation. One of the byproducts of their investments into regulation was their cryptocurrency tailored compliance process, shown on the right. Furthermore, it has remained proactive in taking precautionary steps to overregulate itself and prepare for the inevitable increase of cryptocurrency regulation. One of the biggest concerns around crypto revolves around criminals using the digital asset to remain anonymous and conduct illegal activity. In order to address this concern, last quarter, Silvergate partnered with Elliptic to refine and automate its Know Your Customer process for onboarding new customers. Elliptic has a product capable of exploring potential clients' crypto wallets and instantly identifying suspicious, potentially illegal activities. Elliptic's crypto asset risk management and blockchain analytics will strengthen its compliance moat, improving the onboarding experience, and limit compliance costs. DIEM stablecoin revenue stream. Facebook's US dollar-backed stablecoin, DIEM, which was formerly known as Libra, is expected to be released before the end of 2021. Silvergate was announced to be the sole issuer and custodian of the stablecoin. DIEM had a strong likelihood to eclipse USDC's $15.8 billion in deposits and Tether's $65 billion market cap over time, due to Facebook's 1.9 billion daily active users. Besides adding new customers, management expects DIEM to offer two new revenue opportunities: the yield on the reserve deposits and transactional fees from burning and minting the stablecoin. On the right, I attach a figure from Compass Point Research and Trading article that describes the process of a stablecoin. In the figure, Silvergate would play the role of both the stablecoin issuer and the stablecoin bank. Valuation. To reach an intrinsic value for Silvergate, a sum of the parts valuation was created. First, a 10-year DCF model was created for the SEN segment, which yielded a valuation of $152.83. Then, a 10-year excess equity model was created to model the bank segment of the business, which had a valuation of $39.19. After applying a discount of 20%, the sum of the parts relative valuation was $153.62. Additionally, a 2022 PEG relative valuation was calculated, resulting in an intrinsic value of $187.39. Finally, a price-to-book relative valuation was calculated, resulting in an intrinsic value of $153.74. By weighing these three models, 80, 10, and 10 respectively, a price target of $157.01 was reached, representing a 32.36% upside. Silvergate currently does not pay a dividend. Risk. A majority of the bank's clients and deposits involve cryptocurrency. If popular digital assets such as Bitcoin or Ethereum fall out of favor, it could negatively affect customers' participation within the SEN. Although Silvergate has taken considerable steps to overregulate itself, regulators haven't kept up with the emerging cryptocurrency space. New regulatory legislation could have a material negative effect on the company's bottom line. Lastly, the SEN is an API. If there were ever to be a cybersecurity breach, it could lead to lower customer confidence and cause clients to leave the SEN. Management. Alan Lane has been the president and CEO of Silvergate since 2008. Mr. Lane navigated Silvergate through the financial crisis and was the driving force behind their adoption of cryptocurrency back in 2013. Antonio Martino, the chief financial officer, previously served as the CFO of Lending Point and had over 30 years experience in the financial services industry. Lastly, Michael Lempress, chairman of the board, previously served as the chief legal and risk officer of Coinbase. In conclusion, I recommend that we add Silvergate Capital to the domestic small cap portfolio due to the network effect of the SEN, its regulatory and compliance moat, and the DIEM stablecoin opportunity at a price target of $157.01. In a corresponding move, I recommend that we sell Root Insurance from the portfolio.